Welcome back, everyone, to another deep dive. This time we're going to get into banks.
Ooh, exciting.
I know, right? Everyone uses them, but how many of us really know how they work? I sure didn't until I read it for this.
Yeah, they're a lot more complex than people realize.
That's why we brought in an expert to help us unpack it all.
Yeah.
So to kick things off, can you give us a quick rundown of the basic functions of a bank? What do they actually do?
Sure. So at their core, banks have three main functions: accepting deposits, lending money, and providing a bunch of financial services.
Okay, so that's the classic image we all have, right? You deposit your paycheck, you take out a loan when you need it.
Exactly. Those are the most visible functions. But the way those functions are all interconnected is what makes the banking system so fascinating and, frankly, crucial to our economy.
So how about we break down each function a bit more? Let's start with deposits. When I put my money in a savings account, what actually happens to it? Does the bank, stash it in a vault somewhere?
Not quite. It becomes part of the bank's reserves, which they use for a bunch of things. But a key concept here is fractional reserve banking.
Fractional reserve. Sounds kind of like a math problem.
It kind of is. Basically, banks are only required to keep a certain percentage of their deposits in reserve, on hand.
So like a safety net in case everyone wants to withdraw their money at once.
Precisely. That's the reserve requirement. It helps prevent bank runs and ensures financial stability.
Gotcha. So the bank lends out a big chunk of my deposit to other people or businesses.
Exactly. And that's how they make money, too. The interest rates spread the difference between the interest they earn on loans and what they pay on deposits. That's their bread and butter.
Makes sense. So it's not just about holding our money, it's about putting it to work in the economy.
Right. And in addition to interest, banks generate income from all sorts of fees for services like ATM withdrawals, wire transfers, even just maintaining your account.
Oh yeah, those pesky fees. But hey, got to keep the lights on somehow, right? Our research also mentioned that some banks engage in investment activities too. Can you touch on that?
Sure, they can invest in securities, buy and sell stocks and bonds, which can be another source of profit, but also comes with risks.
It's like they're playing the stock market, but with a lot more zeros.
Pretty much. Now, you mentioned different types of deposits earlier. What are some of the key distinctions there? Well, you've got your basic checking accounts, which are great for everyday transactions, easy access to your money. Then there are savings accounts that typically earn a slightly higher interest rate, but might have some limits on withdrawals.
Right. And then there are those certificates of deposit CVs where you lock in your money for a fixed term to get an even higher interest rate.
You got it. So it really comes down to what fits your individual needs and financial goals.
Risk versus reward, liquidity versus earning potential. It's all a balancing act.
Exactly. And on the lending side, there's a whole spectrum too, from personal loans for individuals to massive business loans and, of course, mortgages for buying property.
It seems like banks offer a financial product for just about every need.
They do. And this is where it all ties back to the economy. By lending money, they're providing capital that enables individuals to make big purchases and businesses to invest, expand, create jobs.
It's amazing how these functions all work together to drive economic growth.
It's a truly symbiotic relationship.
Now, I know there are different types of banks out there, not just the one we see on every street corner. Can you break down some of those distinctions for us?
Of course. So the most familiar ones are retail banks. Your local branches that focus on serving individuals and small businesses, offering checking and savings accounts, personal loans, mortgages, that sort of thing.
The ones with the friendly tellers and free lollipops.
Exactly. Then you've got commercial banks, which cater to bigger businesses and corporations, providing more specialized services like treasury management, commercial lending, trade finance.
So if you're running a Fortune 500 company, you're probably not going to your neighborhood branch.
Probably not. And then there are investment banks, which live in the world of high finance, helping companies raise capital, underwrite securities, facilitate mergers and acquisitions.
So they're the Wall Street players.
You got it. And we can't forget about central banks like the Federal Reserve in the U.S. They play a crucial role in regulating the monetary system, setting interest rates, keeping inflation in check.
They're like the guardians of the financial galaxy.
A good way to put it. It's their job to ensure the whole system runs smoothly.
Wow. So many moving parts. It's like a whole ecosystem of banks, each with its own specialized role.
Absolutely. And we haven't even gotten into the impact of technology yet.
That's right. From those first clunky ATMs to online banking and now mobile apps, Technology has revolutionized how we interact with banks.
And it's created a whole new set of challenges and opportunities, which we'll explore in the next part of our deep dive.
Can't wait. Stay tuned, everyone, because we're just getting started.
Welcome back to our deep dive into the world of banks.
We were just talking about all the different types of banks before the break and how technology is shaking things up.
Yeah, it's a really dynamic time for the industry.
But before we get too deep into the digital side, I wanted to circle back to loans for a minute. We talked about how they work on a macro level. But what about the individual perspective? Like, when is it actually a good idea to borrow money from a bank?
Well, one of the most common reasons is to finance a big purchase that you wouldn't be able to afford outright, like buying a house or a car or maybe even starting a business.
Right. Those big life goals that often require a little financial boost.
Exactly. But it's not just about getting the money, it's about managing it responsibly.
So it's like a financial reality check before you take the plunge.
Precisely. You need to make sure you can comfortably handle the monthly payments. You got to look at your income, your expenses, your overall budget.
Don't bite off more than you can chew.
Exactly. And interest rates play a huge role here too.
Oh yeah, those pesky interest rates.
The interest rate is basically the cost of borrowing money. So a lower rate means you'll pay less overall.
So it always pays to shop around and compare rates from different lenders.
Absolutely. Don't just settle for the first offer you get. It's worth doing your research to find the best terms.
Okay, so beyond interest rates, what else should people keep in mind when taking out a loan?
You've really got to understand the terms and conditions of the loan agreement. Things like the repayment schedule, any fees, potential penalties for late payments.
It's like reading the fine print, but for your financial future.
Exactly. And don't be afraid to ask questions if anything is unclear.
Better safe than sorry. Right.
Yeah.
What about prioritizing different loans if you have multiple? Like, does it matter which ones you pay off first?
It's generally a good idea to prioritize loans with higher interest rates, since those are costing you more money over time.
Makes sense. So if you've got a high-interest credit card debt and a lower-interest mortgage, it might be wise to tackle that credit card first.
Exactly. And this might seem obvious, but maintain a healthy credit score.
Ah, yes, the all-important credit score. It's like your financial GPA.
Pretty much. Lenders use it to assess your creditworthiness. So a good score can help you qualify for lower interest rates and better loan terms.
So pay your bills on time, keep your credit card balances low, be responsible with your credit.
Exactly. It all builds up to a good financial reputation.
Now let's flip the coin for a second. When is taking out a loan a bad idea? What are some red flags people should watch out for?
The biggest one is a lack of a clear repayment plan. If you don't have a solid understanding of how you're going to pay back the loan, it's a recipe for disaster.
So avoid those impulse loans no matter how tempting.
Definitely. And be wary of borrowing for non-essential purchases. Like taking out a loan for a vacation or a new gadget is usually not the best idea.
Treat yourself responsibly, right?
Exactly. Also pay attention to the economic climate. If things are uncertain or you're facing job insecurity, it's generally wiser to be cautious about taking on more debt.
So it's all about being aware of both your personal circumstances and the broader context.
Precisely. And one last red flag. Watch out for loans with unusually high interest rates.
Yeah, those can be a real trap.
They can quickly spiral out of control, making it extremely difficult to repay the principal.
Okay, so those are some really important things to keep in mind when considering a loan.
Definitely, borrowing money can be a powerful tool, but it's crucial to use it wisely.
Great advice. Now let's shift gears a bit and dive into the digital side of banking. We touched on it earlier, but technology has had a massive impact on the industry.
It has indeed. From those early ATMs to online banking and now mobile apps, it's completely transformed the way we bank.
I remember when online banking first came out, it felt like a revolution. Suddenly you could check your balance and transfer money without having to physically go to the bank.
It was a game changer. And now with mobile banking, we can manage our finances from anywhere at any time.
It's amazing what we can do with just our phones these days. Deposit checks, pay bills, even send money to friends and family instantly.
It's incredibly convenient. But of course, with any technological advancement, there are potential downsides.
Like cybersecurity threats.
Exactly. As banks become more reliant on technology, they also become more vulnerable to cyber attacks.
It's scary to think about someone hacking your account and stealing your money.
It's a serious concern, and banks are constantly investing in security measures to protect against these threats.
It's also up to individuals to take precautions, right?
Absolutely. Use strong passwords, be wary of phishing scams, monitor your account activity regularly.
So it's a shared responsibility. Banks need to provide robust security, and individuals need to be vigilant.
Exactly. And it's not just cybersecurity that's shaping the future of banking. We also have to consider the rise of fintech.
Fintech, those innovative startups that are disrupting the traditional financial industry.
Precisely. Fintech companies are offering new ways to lend, borrow, invest, manage your money. It's a really exciting space.
They're definitely pushing the boundaries and forcing banks to adapt.
It's creating a more dynamic and competitive landscape, which ultimately benefits consumers.
More choices, more innovation. It's a win-win.
Absolutely. The banking world is undergoing a major transformation.
This is also fascinating. We've covered so much ground already, from the fundamentals of banking to the impact of technology and the rise of fintech.
And there's still more to explore. In the next part of our deep dive, we'll delve into the future of banking and the challenges and opportunities that lie ahead.
I can't wait. Stay tuned, everyone, because this deep dive is far from over. Welcome back to the deep dive. We've been unpacking the world of banks, from those everyday transactions to the impact of technology on the industry.
It's been quite a journey.
It has. But, the world of banking never stands still. So looking ahead, what does the future hold? What kind of challenges and opportunities are on the horizon?
That's the million-dollar question, isn't it? Change is the only constant. But based on what we're seeing now, I think we can make some educated guesses.
So put on your futurist hat. What trends are shaping the future of banking?
Well, one major trend is the demand for personalized and data-driven services. Consumers want that tailored experience, and banks are using data and analytics to provide it.
It's like that Netflix effect, right? Where they recommend shows based on your viewing history.
Exactly. Banks are doing something similar. Analyzing customer data to understand spending habits, financial goals, risk tolerance, all to offer more relevant products and services.
It's all about that customer-centric approach.
Yeah.
So what other trends are you seeing?
Open banking is another big one, allowing consumers to share their financial data with third-party providers.
Okay, break that down for me like I'm 5.
Imagine your financial data from all your accounts is like a piggy bank with different coins. Open banking lets you give a key to that piggy bank to trusted third-party apps.
So they can see what's inside and help me manage it better.
Exactly. They can provide personalized advice, budgeting tools, even alternative lending options.
It's like putting the power back in the hands of the consumer.
Right. It breaks down those silos between banks and fintech companies, fostering competition and innovation.
And speaking of innovation, what about artificial intelligence?
Yeah.
How is AI changing the game in banking?
AI is already making waves. Automating tasks, improving fraud detection, powering those helpful chatbots, even making lending decisions.
Wow, so AI is like the multitasking wizard of banking. But are there any risks with all this reliance on technology and AI?
Of course, data security and privacy are huge concerns. Banks need to use AI ethically and responsibly.
So it's about striking that balance between progress and protection.
Exactly. And there's also the potential for job displacement as AI takes over certain tasks.
That's a valid concern. How do you see the banking workforce adapting to these changes?
We'll likely see a shift in the skills that are in demand. More emphasis on data analytics, cybersecurity, AI development. Those traditional teller roles might decline.
So it's about evolving with the industry, acquiring new skills to stay ahead of the curve.
Exactly. It's a time of both challenge and opportunity for banking professionals.
Now, we touched on cashless societies earlier. Do you think physical money will actually become obsolete?
It's definitely possible. We're already seeing a huge drop in cash usage as digital payments take over.
I hardly ever carry cash anymore. It's all cards and mobile payments for me.
That trend is likely to continue. But a completely cashless society raises concerns about financial inclusion for those who might not have access to digital tech.
Right, so there are trade-offs to consider. Convenience versus accessibility, security versus privacy. It's a complex issue.
It is. And that's why staying informed is so important. The more we understand these trends, the better we can navigate this evolving landscape.
Well, this deep dive has certainly given me a lot to think about. It's amazing how vital banks are to our everyday lives and to the economy as a whole.
It's been a pleasure exploring these complexities with you.
And thanks to all our listeners for joining us on this deep dive into the world of banks.
Until next time, stay curious and keep exploring.